what blockchain is really trying to do at its core is to create a way that you and I or me and somebody in Afghanistan, it doesn't matter where they are, can go through the business process, do commerce, and you don't have to trust each other. All you have to do is trust the platform.
Welcome to the Real Estate Mogul MD podcast. Thanks for tuning in and taking control of your financial future. This is a show where we not only motivate and inspire, we give you actionable real-world experience to help you live life by design. You'll hear journeys and stories from other physicians, investors, coaches, consultants, and entrepreneurs. And now, here's your host, Brett Riggins. Today, we're going to continue our conversation down the journey of real estate. We're going to talk a little different asset here. We're going to touch a little bit on storage units. I'm excited about is we're also going to talk about some new technology that's driving forward, and it's on the forefront. It's not released yet, but we're seeing this being built on the back end just to prepare for it. The cool thing about this technology is it has the potential to make our illiquid assets liquid. And they're going to use blockchain, not cryptocurrency, to do something like this. Stay tuned to learn a little bit about how you may buy into real estate, similar to how you buy into stocks. And we're not talking REITs. We're going to have this conversation with a guest today, second time on the show. I love it. He's the founder of STOR. That's STOR. He's leveraging his vast experience as an entrepreneur in otolaryngology. Hopefully I said that right. Ear, nose, and throat, in case I messed it up. Practitioner to guide people toward financial sovereignty. Everybody, please welcome Dr. Joseph Ryan Smolars to the show. All right, back for round number 2. Ryan, welcome to the show, man. I'm excited to have you here.
I'm excited to be here. I really appreciate you having me back.
So the first time we talked with you here on the show, it was awesome. We talked about some of your journey in medicine and in real estate, and we kind of tippy-toed around this topic that I'm excited to jump into today. But for those listeners who don't know, just give them a little bit of background medically. Like, where'd you start? And I love where you're at now. So we got to talk about that a little bit too.
Yeah. So my medicine journey, man, it's been a long road. I started, where did I even start? So I went to undergrad in Austin in Texas. So I grew up in a small town in East Texas, and then moved to Austin, to the big city. And man, I was sort of overwhelmed. And as I was going through the education process, I went to Galveston from there, and then ended up in Houston to do my training in ear, nose, and throat. It's called otolaryngology, so ear, nose, and throat in Latin. But anyway, went through that whole process. We were actually training in the biggest or the busiest trauma center in the world. So yeah, we were very, very, very busy. I'll put it that way. And so in our facility, we had all the helicopters going out to get the people. And right down the road, there was a whole nother institution that was level 1 trauma also. And they got most of the ambulances and all the stuff that was around there. So man, it was something. I've never actually been to war, but I would probably describe it as that, but nobody was shooting at us. I mean, it was intense.
Constant.
Constant. Had that experience. It was very life-changing. And then, I was a third-year resident out of 5, and I was looking through a journal, and the back page was come to paradise and, do ENT. And so I kind of put it, folded it up, put it on the counter, and that was it. I knew that that's what I was going to do. I wanted sort of not the lifestyle that I had while I was training. And so, over the next couple of years, I started talking to my now partner and ended up in the U.S. Virgin Islands. I live on St. Thomas, work here. I actually spend half of my time in St. Croix. So I'm constantly in the plane going back and forth. We have a practice over there. And so I've been here 13 years. It'll be 14 in July. And so this is our home. My wife has all of her best friends here, and I have a group of friends, and we can, go surf when there's extra time. And I really love it because now that I have kids, I think it's probably the best place in the world to bring kids up in this very small, tight knit community. There's a lot of the things that we don't have to deal with that kind of go on in the States, and so we feel very privileged and very honored to be a part of this community.
That's awesome. And back and forth in the plane, do you pilot yourself or do you have?
So I did pilot my own plane several years ago. So back in 2017, we had two catastrophic hurricanes back to back. And so through all of that, we sold the plane that we were commuting back and forth with. But yeah, I have all the licenses and all the stuff. But right now, it's just easier for me to hop on commercial flight and get back and forth and that sort of thing. So I'll get back into it eventually. Yeah, it's a lot of fun, but it's very time consuming and very costly. So
imagine. And then you said it's a great place. I mean, come to Paradise. That just sounds awesome. It's a great place to raise a family. And last time we spoke, you were actually looking for additional help. Are you still looking for help?
I am. If there's any,
come to Paradise.
Yeah, come to Paradise. Yeah, we are still looking. It's interesting. Everybody says that they want to come until it comes to signing the dotted line, and everybody's like, it's a pretty good ways.
Reality. You gotta, because you move away from everything, man. Everything. Yeah. The same way for us when we moved. So we're still in the States, but we moved away from everybody. We moved away from all of our family, and it's just for me. Once I make a decision and to take action, like I'm taking action. Like I will take the punches and just roll with it because the decision's made. But all along the way, you get the guilt trips, you get the, how could you do that? And then you get the, well, I've always thought about doing that,
I hear that a lot, and it's interesting. I mean, I don't think we would see family as much if we live like down the street, because the way our business and really all the businesses here are set up is that you have to get off the rock. Or you're going to go crazy. So we do travel a lot more than we would have if we lived in the States.
Right.
So most of that time spent going and visiting family and that sort of thing. Yep. And so it really has been a blessing. I can't speak highly enough about the people and the culture and that sort of thing.
It's awesome. It's exciting. Yeah, I'm getting even more excited. Maybe I should take up ear, nose, and throat and fill in that new spot for you. That's exciting. But I am in real estate, and we talked a little bit about real estate the last time you were here, and kind of like your journey through. And we touched a little bit on like it is an industrial, right? The storage space.
Yeah. So you mean the fund?
So we talked a little bit about industrial, but we didn't get into the fund per se. And that's kind of where we want to tiptoe in. So I was kind of prefacing the conversation with that. You've done some storage rental investing prior.
Yes, absolutely. I'm involved. I think we're trying to add them up. It was 8, and then we sold one. So I believe it's 7 that I'm still involved with. And that's been since 2017. So we have taken, the lumps and stuff with our capital to be able to get that educational experience of going through these deals and really, figuring out what our buy box is and what principles we stand on and what facilities we're looking for. And so, if we hadn't had that experience, I don't know that I would be comfortable taking on investors, but it's definitely time. We're definitely ready. We have the resources. We have the people behind us. So when there's questions that come up that we can't answer, we have places to go to. And so we are ready, and we are super excited.
And now that brings us to a whole new venture for you, or a whole new avenue, not venture, same thing, just bigger direction. And then when you said fund, then are you syndicating these storage deals similar to what we see in multifamily?
Yeah. So it's an interesting structure the way we have it. It's called a Series LLC. So it's not a true syndication, but it's also not a true blind fund. So when we buy a facility and it comes under the fund, the investor is able to direct their capital into which deal they want to do. So if you think about a holding company, and underneath all the facilities that are under that structure, it's basically like a whole bunch of LLCs linked together.
Mhm.
And so, to me, having gone through all the structures that were available, I thought it was, it made the most sense to me. It made the most sense for, taking on investors in this type of, arrangement.
Very cool. So Series LLC, and then putting these things together, now offering these opportunities to other people. And we can find more about you and this process, right, at storepartners.com, correct?
That's correct. STOREpartners.com.
STOREPARTNERS.com. Store as in storage.
Yeah. So there's no E, it's just STOR. So
Perfect. I
yeah.
love it. That's why I spell these things out, because I always mess them up. So it's STORPARTNERS.
That is correct.
Beautiful. So we'll get that in the description as well, too. But that's where we can learn a little bit more about you, your process, and the opportunities that are here. Tell us a little bit more about this blockchain thing that we had talked about last. I'm so excited to learn more about this.
Yeah. So this is how a big part of why I took this venture is because I have this vision of using technology to make a illiquid asset liquid. And so as we've gone along, and we have to be very clear to the audience here what we're talking about. There's blockchain and then there's cryptocurrency. We are not in this conversation talking about cryptocurrency. We're talking about solely blockchain. And so what that gives us the ability to do is basically an Excel sheet that can't be hacked. So if you take something off of it, it's not like you just cut and paste it away. You can have the ability to tell that was tampered with, basically. And so there's all these sort of computer science terms, hash keys and all this stuff. But the basis of it all is to be able to have a trustless system, right? So everybody talks about trust in real estate and business and all these sort of ventures. What blockchain is really trying to do at its core is to create a way that you and I or me and somebody in Afghanistan, it doesn't matter where they are, can go through the business process, do commerce, and you don't have to trust each other. All you have to do is trust the platform. Because if you have a ledger that can't be changed without people knowing, then there is no trust that has to be there. So blockchain is filling the trust gap, just like the internet. When we all got involved with it, right? Now I can do business with someone anywhere in the world. The internet, really its core was to decrease the distance gap. Right. Mm-hmm. So with these technologies, I think you have to be very clear on what you're trying to address and what pain points for people you're trying to solve. And that in its core is really what it is.
Interesting. And are you to the point now with this vision of implementing it into, say, STOR Partners?
Yeah. So we have been building it out on the back end. But in my opinion, the world is just not ready for it. And so we do have the ability to tokenize these assets, but the tokens that are available to the investors at this point really I'll put it this way, even if the tokens were lost completely, like they were hacked out of the system and all that sort of thing, nobody would ever know because they don't hold the value at this point. So the reason that we're building this out is to be able to go forward very quickly when these secondary markets become available. So the way it will probably work in the not so distant future in a secondary market, let's say that you in particular, we have a development deal and you really like the land part where you're getting it zoned and you're getting it shovel ready, right? And so in these deals, you understand that process to the T. And so you as an investor can invest in that particular period of time of that deal. And so once they get it shovel ready and that's past your comfort level, then you go to that secondary market and you sell that piece, right? And then the next person who likes getting the shovel in the ground and taking it to foundation or taking it to full build and then at CO, they want to come out of the facility and go into the next one. It's a way to really churn through deals and to be able to come in and out of them in your particular point that you want to. That being said, you can hold on to the asset just like you did before. Just keep that value locked up, and there you go. So it really does open up a whole lot of, it's basically like being in the stock market, right? You're buying, sell stocks. People are pretty familiar with that. When you do that, you're actually buying part of the business, right? So there really is no difference, except for the fact that they're small. The smaller companies may be tokenized and that sort of thing. But there again, they may be gigantic companies. They may be BlackRocks that are now tokenizing these assets and being able to transfer them. And then with that tokenization comes all sorts of other trading that can happen. You can, have options trading, puts and calls, and be able to sell insurance on shares, or we call them units. But yeah, it opens up a whole different market.
Wow, my mind is just like spinning. Because if you go through, I have not gone through many syndication opportunities, but going through those syndication opportunities, one of the tie-ups is just like you said, it's an illiquid asset and you don't have control basically as a limited partner.
Yep.
And this is kind of giving you the idea of, okay, this is still an LLC, but it's more, you're funding it as opposed to being a member of it. I mean, you're still purchasing these units, but somehow there's this separation that pulls you out of that, because in probably 99.9, I don't know, very high percentage of these operating agreements is there's this section that says, hey, you're out of luck because you don't get to pull your money out. You don't get to do anything with this. It's all up to us.
Yeah.
So this kind of is that turning point. Wow, there's so much opportunity in that, really.
Yeah, it really is. And with the structure that you're talking about, the operating agreements and those sorts of things, you can write it however you want to. So if you don't want to have somebody have the opportunity to be able to have it liquid, then you just write it into the operating agreement. So it truly, in my mind, does open up so many opportunities to do these deals, have people happier. It just gives you options. And also, I really keep going back to the core of this being a trustless system. And I think that really is the most value. And
in this particular scenario, I mean, that could go to multifamily, that could go to really anything. But we're talking about the storage place. And I think we talked about this a little bit earlier, or on the last time that we spoke. Is there a particular market or areas that you love to buy these storage units in, like close to, around,
Yeah, we were just talking about this. This is a topic that's near and dear to my heart. Business-friendly states.
Mm-hmm.
That's number one. Places where people are going, Utah, Texas, Florida, North Carolina. I mean, if you just look at the DOT, the Department of Transportation, and see where the migration is, to me, that's where you want to be, is where everybody else wants to go, right?
Mm-hmm. Yeah. Is there any relation with, like, say, I feel like I'm seeing a trend of this, is where there's a multifamily and then there's a storage complex.
Yep. So one of our demographics is how many basements are there in the area, mm-hmm. right? And we also look at HOAs. Are they forbidding people from letting them keep RVs in their driveway? Are they limiting, whatever it is? You can't build storage sheds out in the back. You could take this as far as you want, but there are obvious advantages to building storage in those particular areas. One of the things that is very clear is that you want your market to have the amount of people there that have the means to be able to get a storage facility to pay monthly. But at the same time, you don't want to be in an area where people have too big of homes and that sort of thing, because they've got 8 extra rooms to put their stuff in.
Congregate stuff, yeah. Yeah.
So there's all kinds of strategy, and man, you go to some of these meetings where the REITs are there, these big companies, and I tell you what, man, it's all data driven, and it's all just mind blowing. I have heard people that will have a video camera outside the door, and they'll video the car that comes in, and they will video the type of watch the person or type of phone that the person has. And so you go into a different bracket, but the time you get to the front door or the counter onto what your storage unit is going to cost.
Oh my goodness. And there's no regulations on any of that either.
No. So you have an Apple Watch, you go into your own category.
Oh my goodness. So I thought that we were leaning more towards like the information piece, like where to put these, or like trying to access, certain information of the user. But no, we're talking about charging somebody.
Yeah, I mean, it's unbelievable. The amount of marketing, I would call that marketing of what's going on out there. And I think it's a good lesson for both your audience and my audience, for that matter, to understand that, this is happening. And it can't be just in storage.
Right.
So,
So these cameras basically assess a potential user or client, and that drives the cost of what they would pay for the storage.
Yeah.
Wow, just making a note of that I never even thought about something like that. And that's in real time. So is there like AI driven? Like that's real fast.
Yeah. Yeah.
Huh. Wow.
It's all going more to AI driven, right? I mean,
right.
That's just completely changing the market. And we've had talks with people that are from the AI industry on how this is being implemented into storage, into commercial real estate, and it's unbelievable. It's truly unbelievable.
Wow. Yeah, I never even thought about anything like that. So where do we go? I mean, for me, in my lane, there's always, both ends of the spectrum. Whether, it all comes down to your why and where you want to go, how you want to exit, what do you want to do to get to whatever level. Obviously, when you talk about REITs and you're talking about, that other side, that's mass. They have to keep turning massive numbers in order to feed the machine, basically.
Yep.
But on the smaller end, I don't want that to scare people away either, because you don't need all of that, right?
No.
There's still, even the mom and pop kind of deals to where you could go direct to seller and, do these things even without syndications or anything. So there's two totally different sides of the spectrum.
Absolutely. So we actually talk about this a lot as well. So if you look at the amount of facilities that are owned by the REITs versus mom and pop, it's split. I can't remember if it's 80-20 or 70-30. But the point being is that most of the storage facilities out there in the country right now are mom and pops. And so, now, yeah.
I thought that was going to go the other way.
Yeah, everybody does.
Yeah.
And so there is a massive opportunity there to get to know these owners and a lot of them are just getting to the point where they're older and they just don't have the eye on the ball anymore, and they're looking to get out. And with that, we can come in and make a deal with them and say, hey, okay, what is it that you're looking to get out of this facility? Because a lot of them, they want to keep the income coming in, but they don't actually want to run it. They don't want to do the
asset management. That's really where the money is.
Right. Yeah. So we'll go in and say, okay, well, why don't we do this? Why don't we shield your capital gains? You seller finance it to us, and we'll try to work out a deal where you get, almost or as much money coming in on a monthly basis to keep, the bills being paid and all the stuff. What does that look like? And so we've had tremendous success with that. But to do that, you have to go into the deal with the mentality of, we have to make this work for everybody, right? You do 2 deals and you are not a very good person, an ethical person, and something like that, the word will spread very quickly.
Yeah. You do deals that you focus more on you than the other person. Yeah.
Yes.
The law of economics will come get you. I was just talking about this. I tend to regurgitate things I'm reading, and right now I'm in the Think and Grow Rich again, which I think is a lovely book and it should be read all the time. But the law of economics, there was a point when he talked about, this was written in 1937, of business people basically going out and getting more than what they have earned.
Yeah.
Getting more, doing nothing and getting something kind of idea.
Yeah.
And in that time period, it's just the law of economics will come back. It will always equalize itself out. And just like what you're saying here, same way. If you go out and it's all about you, and you take advantage of people, it'll catch up with you.
Oh, absolutely. I had a meeting not too long ago with an incredible mentor. I would call him a mentor of mine. He said, Ryan, listen, you want to know how you become successful? I said, yeah, absolutely. He said,
Tell me.
yeah. He said, leave some meat on the bone.
Yeah.
Leave some meat on the bone, because in that way, people are going to want to do deals with you. Right. And you're going to do a lot more deals. And with that, it's going to come a lot more capital. So always leave a meat on the bone. And he's like, it doesn't have to be a little bit. You're going to get your fair share, right? What you are doing is not doing deals. You're building relationships with people, right? You're spreading that, your reputation. And so I really took that to heart. I think it was probably one of the best pieces of advice that I've received. But yeah, it was super cool.
Yeah, I think that aligns with delayed gratitude, because in so much, and I mean, for me, probably like a lot of other people, when we first get into real estate, especially when that's all we do is just real estate, it's like that's what's putting food on my table, and it's like that human nature just to grab. And, I've heard it called many times cash grab. And, when we set up, especially on the acquisition side as general partners or operators, there's this opportunity to do this kind of thing. But I think that's a great and amazing, and I wrote it down. Hopefully the listeners had the ability to write it down too. We're not doing deals. We're building relationships, and leaving that meat on the bone gives us the ability to pay it forward. Right.
Oh, absolutely. Absolutely. I mean, in a lot of these situations too, what sometimes we forget is maybe we have more experience than the owner seller, and there is opportunity to use that to your advantage as leverage. And again, go for it if you want to, but it's in the end, it's never going to make you ahead.
Yeah. Yep. I always, aligning that with in the single family world. And there was a point in time, we would have 5 acquisition people on the phone constantly calling and all of that. But when we connected with somebody who basically their why aligned with what we were able to do, it was always felt good. Even in the moments where, we could give a little more. But when we can meet that seller at their needs on their terms and then bring more value through the process, that's when it felt the best.
Oh, absolutely. Absolutely. You always have that deal where it starts off a little bit sour. How does it end up? Right. Never works out very well for anybody.
Yeah.
There's just so much hassle in it. Right.
Yeah.
It's just, yeah.
I'm smiling from the deals, even at this moment, deals pop into my mind that we're doing. Like, sometimes it takes so much more work and just the squeeze. The juice isn't there from the squeeze. But other times it goes well and you end up more or in a better position than when you started. So, but if the listeners want to learn more, they can reach out to you at STOR Partner STORPartners.com, and there's no E on the store either. It's
No.
STOR Partners.com. Connect with you. And you guys are also working with maybe even providing funding for other opportunities as well, too. And they can find all that information on that website, correct?
Yep.
Awesome.
Absolutely.
And you are doing a podcast. So let's not skip over that. It's called the Medicine and Money Show, right?
That's it. Yeah, we're talking to our investors who were reaching out to doctors to try to bring them into our community. And the Medicine and Money Show, just like everything else with the business and what we were just describing, is to provide value, right? And so with that, we're doing some educational pieces. Last week, we had a student loan attorney on the show.
Nice.
Yeah, teaching people how to really dig into their financial aid and see if there's any programs out there that they qualify for. And man, there was so much that came out of that conversation. I was like, where have you been for, since I got out of residency or even out of medical school?
Yeah.
And so we're bringing on cost seg people who are trying to teach, about the depreciation and how the K1s work and how that loss filters down to you and it's a tax benefit. And so we're really trying to reach into the core of our investors and trying to find the pain points and see if we can provide some value to help them either continue or start their financial journey.
Yeah, that's awesome. Give more and sell less. I think that's the important piece. And it's moments like this that we get to do this and share our experiences and our opportunities. So we want to thank you again, Ryan, on just spending some time with us and sharing your experience with us here today.
Absolutely. And thank you so much for having me back. And I would love to come back a third time if the stars align.
Absolutely, man. We'll put it out there. We'll put it out there. We'll talk it into fruition. But I'm going to talk this into fruition too. I'm going to come see you because I do want to just live in paradise, right? That was the come to paradise. I want to come to paradise, man.
Come on, you're always welcome.
Absolutely.
We'll show you around.
Awesome. Well, I'm excited about it. And I think the listeners are excited about this too. And because there's always questions about storage and the benefits of it when it comes to, not being a landlord and, the repairs. And there's so many benefits to the storage world. But there's also more challenges in certain areas too, especially if we're talking about development and strategy and all of that, and going up against the bigger companies as well too. So that'd be something for the listeners to go to storepartners.com, learn more about, connect with Ryan. And for the listeners out there today, thank you so much for spending some time with us. And maybe the next time we do this, we will do this from paradise. I think let's get in the same room and do this. But everybody, thank you for your time. Reach out to Ryan and learn a little bit more about him. Check out the Medicine and Money Show, the podcast there. And thank you for your time today. And thank you for your attention. We'll catch you on the next show.